first half of the year gave us a US stock market crash while gold and silver prices soared. But what about the second half? If you missed the mindless gold and silver surge last year, or if you didn't buy the dip after the crash, it doesn't matter. Because what is coming next isn't about who makes money, it's about whose money is going to be redistributed. All investment logic is about to completely change after the Lunar New Year. The harvesting phase we have been warning you about the brutal second half of this game has finally begun. The United States has finally taken action this year. What does that mean? On January 30th, gold fell by as much as 21%. Silver crashed by nearly 47%. In this crash, countless smart investors sold at the exact same time, triggering this massive crash. When everyone moves together, that is the definition of a setup. Hello everyone, welcome to Stewardship Finance Academy. Listen closely. The first thing the US did was use the world's largest gold futures exchange, Comex, to raise margin requirements. What does that mean in simple English? Imagine you want to borrow money to buy $10 million worth of gold. The exchange says, okay, but you need to put up $600,000 as collateral. That collateral is the margin. But suddenly, they change the rules. They say we need more collateral. Give us another $200,000. But you don't have it. You borrowed the big money because you only had the small money. So what happens? You're forced to sell your gold and silver to pay them back. This is called a liquidation. It forces everyone who used leverage to sell at the same time. This is exactly why silver fell harder than gold, because the margin requirement for silver was hiked aggressively from 11% to 15%, while gold only went from 6% to 8%. This proves what I've always said. The global price of gold and silver isn't about scarcity. It is about whether the US wants them to rise or fall. Have you ever wondered why countries around the world are scrambling to buy gold, yet the US seems unbothered? That was just the first blow. The second thing that happened is even more terrifying. We all know the US government needs to print money and lower interest rates to survive their debt, right? But suddenly, news broke that they are preparing to appoint a Federal Reserve chairman who is opposed to printing money. As soon as this news hit, the Magnificent Seven US stocks plummeted. How do we handle this second half of the game? If you don't want to be a victim, if you want to use this chaos to change your social class, subscribe to this channel. We will be your guide. If you're worried about forgetting what you've heard, which would be a waste of your time, then like this video right now. It will automatically be added to your liked videos playlist, so you can come back and follow along anytime. Before we continue, I must share a key principle. Beginners always ask, how do I win? But even Warren Buffett can't win every time. You must reverse your logic. Ask yourself, how do I survive when I lose? You must think like a cheetah patiently waiting. Don't ask when assets will skyrocket. Ask when they will plummet. Humans have mined 220,000 tons of gold since the pharaohs. But most of that is jewelry or locked in national vaults. It is frozen. It is never traded. The price of gold is actually determined by a tiny fraction, about 500 tons, that is traded daily on the Comex in New York. When China, Russia, or India buy gold, they don't buy it on the New York Stock Exchange. They send agents to vaults in London or Switzerland, pay cash, and ship the physical bars home. These are private deals. They don't immediately show up on the price screen. So, even if the world buys thousands of tons of physical gold, the price you see on your screen is controlled by the paper futures contracts in New York. American capitalists invented these futures to control the price. Remember, with just $600,000 in cash, I can control $10 million worth of gold. That is the power of leverage. Comex warehouses hold about 500 tons of gold. But over 900 tons are traded daily. Where does the extra gold come from? Thin air. It's paper. If I want to crash the price, I don't need to sell real gold. I just put up a small deposit and sell a promise to deliver gold next month. When I dump $100 billion of paper gold onto the market, everyone panics. Run. Sell everything. Real holders sell their physical gold because they see the price crashing. Only risk a few billion to wipe out trillions in global wealth. Why does this futures price matter to the physical world? Imagine I'm a miner in Africa. I've unearthed gold and I'm ready to sell it to Switzerland. How do I price it? Can't just make up a number. We need a consensus. If the Comex futures price is $5,000 today, I will add a small $20 processing fee and shipping costs and sell it to you for $5,020. That is how the transaction is done. Therefore, Comex is the global ex-factory price. If that paper price drops, the price of gold mined in Africa drops. The price in the jewelry store drops, and the value of gold bars sitting in London vaults drops on paper. Even if the gold is locked away and never touched, the asset value on the balance sheet collapses. This isn't a conspiracy theory, it's history. Declassified US State Department documents from 1974 reveal a strategy called the poison pill. Back in 1971, the US decoupled the dollar from gold. The world panicked and rushed to buy gold, driving the price from $35 to $200. The US dollar was at risk of becoming worthless. So they turned gold into a casino. Before 1974, the gold market was in London, and it was a zero-sum game. You give me money, I give you a physical gold bar. To drive the price down, you actually had to have gold to sell, but that was too expensive for the US. So they opened the paper gold casino in New York. Now, you don't need gold bars. You only need a $600,000 deposit to trade $10 million. You can sell first and buy later. You can sell gold you don't even have. When gold prices become volatile, central banks get scared. They can't hold reserves that drop 50% in value. So what do? They sell the volatile gold and buy safe US Treasury bonds that pay interest. That was the goal of the poison pill, force the world back into the dollar. Fast forward to today. Since the 2022 Russia-Ukraine war, countries have been dumping US bonds and buying gold again. Gold hit a high of $5,600. Why did the US let it rise for 3 years? Because they were watching you buy. The higher you buy, the harder you fall. Now that the world is loaded up with expensive gold, the US hikes the margin requirements. Boom. The price crashes 21%. Think about the central banks. If their gold holdings were worth $1 trillion when the price peaked at $5,600, then with the price down 21%, their gold assets evaporate by $200 billion overnight. How does a central bank explain losing $200 billion to its citizens? They can't. Their balance sheet collapses. They'll be forced to sell gold to stop the bleeding and crawl back to US treasuries. This is the harvest. But is it different this time? You'll say the US is losing power? Let's look at the numbers. India has 880 tons of gold. Germany has about 3,000 tons. China has accumulated 2,300 tons, but the US. They still officially hold over 8,100 tons. However, the Comex warehouse is running low. Take silver, for example. There are 400 million ounces of silver futures contracts expiring next month, but Comex only has about 100 million ounces in the vault. That means for every 4 people who want their silver, only 1 can get it. If they can't deliver, it's a breach of contract. So, is the bull market over? No. Look at the chart. Despite the crash, gold and silver are bouncing off the 50-day moving average. Most people who bought 6 months ago are still in profit. This is not a bear market, yet it is a violent correction within a bull market. This volatility is a feature, not a bug. It might even be a chance to buy back in at a lower price. But be warned, the first blow of the margin hike has landed. The second blow of the anti-printing Fed chair is coming. How do we survive 2026? I built a system to protect profits during these crashes. In 2026, I will offer this newly improved investment system in my SFA, Free Stock Investment Masterclass. It is completely free, but spots are limited. Click the first link in the description below to join. Don't be a victim of the harvest. Be the cheetah. See you in the next video.